Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 2023. S&P 500 enters bull market, Nasdaq underperforms. This week, the S&P 500 entered a bull market, gaining 0.4% and marking its fourth consecutive increase. However, the Nasdaq 100 lagged behind, experiencing its first decline in 7 weeks as money flowed into beaten-down areas such as banks and small-cap stocks. Regional bank stocks rose by 3%, and the Russell 2000 increased by nearly 2%. The VIX, a measure of market volatility, reached its lowest level since February 2020 at 13, while the VIX started to decouple. Surprising central bank moves. Unexpected rate hikes by 2 central banks this week have sparked speculation that policymakers may need to keep rates higher for longer. In the meantime, U.S. data indicating a cooling labor market have supported the belief that the Federal Reserve will likely pause in June. Unemployment benefit claims have returned to their highest level in 19 months. Currently, swap traders are pricing in a 1 in 3 chance of a Fed hike next week and nearly 90% probability of another increase in July, while expectations for rate cuts by year-end have significantly diminished. European stocks decline, Japanese Nikkei extends gains. European stocks declined as pessimistic outlook from Croda International plc weighed on chemical industry shares. On the other hand, the Japanese Nikkei recorded its 9th consecutive week of gains, the longest positive streak in over 5 years. Currency performance and Turkish lira. In the forex market, the Turkish lira reached a record low against the US dollar, with a weekly decline of 10%. President Recep Tayyip Erdogan has completed key appointments to the economic team, signaling a shift towards more conventional policies. The U.S. Treasury market experienced significant intraday fluctuations, and the yield curve inversion, 2s30s, deepened. The dollar declined for the second consecutive week. SEC lawsuits impact cryptocurrencies. Cryptocurrencies mostly declined after the U.S. Securities and Exchange Commission, SEC, filed lawsuits against Binance and Coinbase. Solana was among the hardest-hit tokens among the larger ones. Despite volatility, gold prices rose during the week. Oil prices fell as the market was unimpressed by news of Saudi production cuts, with WTI crude oil trading around $68. Analysis: new bull market or bear market rally? With the rally surpassing 20%, the question arises whether we are in a new bull market or simply experiencing a rally within a bear market. Let's explore both the bull and bear arguments. Bull case: historical patterns and extremes pessimism. The S&P 500 broke a 12-month streak of year-on-year negative returns in April, and historically, the market has risen in the 12 months following such a breakthrough. The relative calm in the S&P 500's volatility index, VIX, which hit a 2-year low, has been puzzling. Every biennial VIX low, except in August 2000, occurred during a bullish phase. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Wall Street had prepared for an earnings recession, which has not materialized. In fact, forecasts for the S&P 500 have been revised upward, implying better corporate earnings growth prospects than previously thought. Another bullish argument is the extreme pessimism. Negative sentiment reached an extreme peak last fall, just before the market bottomed out. The bull-bear spread reading in the IE's weekly survey was the most bearish since March 2009, the month marking the market bottom after the global financial crisis. Bear case: narrow market breadth. The mainstream argument for a bearish case revolves around the narrow breadth of the market. Comparing the current combined weighting of the top 10 largest stocks by market capitalization in the FT Wilshire 5000 index to 10 and 23 years ago during the dot-com bubble reveals a significant difference. Even in 2000, the weight of the top 10 stocks was much lighter than it is today. However, the most interesting observation is the performance of these heavyweight stocks. In the past, the weighted returns of the top 10 were outperformed by the broader market, but not this time. This indicates a relatively lower reward for investing in stocks other than mega-cap ones. Historical analysis and interest rate cuts. For over a year, we have been prepared for the most anticipated recession in U.S. history. However, consensus suggests that the economy has not yet entered a recession. Recessions tend to coincide with major turning points in bull markets, with the exception of the bull market that began in 1942. A related point is that the stock market tends to wait for Fed rate cuts before reaching a bottom. If this is indeed a new bull market, it is the first to begin while the Fed is still raising rates. Example of RBA and Bank of Canada. The Reserve Bank of Australia, RBA, and the Bank of Canada's recent moves have demonstrated that even after a central bank pauses its tightening cycle, the next move can still be a rate hike. This has dampened expectations of a likely Fed pause at the upcoming meeting. Both the Australian and Canadian economies have similarities and are considerably smaller than the U.S. economy, making their combined experience significant. The RBA skipped a rate hike in February and March but left the door open for future hikes. This week's increase marked the third consecutive hike. In contrast, the Bank of Canada believed that the January hike would be the last, while the market expected a rate cut before the June meeting. The main concern for central banks is inflation, which is not declining rapidly enough. This presents an unpleasant message for the United States, where inflation is higher than in Canada, though lower than in Australia. Looking at the core measure, the decline in inflation across all three economies is painfully slow. Regulatory actions impact cryptocurrency liquidity. Regulatory actions by the U.S. Securities and Exchange Commission have led to worsened liquidity on one of the largest cryptocurrency exchanges. The bid-ask spread of Bitcoin on Binance U.S., the exchange serving U.S. customers, has significantly decreased. This comes after the SEC accused Binance and its CEO of mishandling customer funds, deceiving investors and regulators, and breaking securities rules. The deterioration of liquidity on Binance U.S. has been ongoing for a few months, but this recent event appears to have been the tipping point. Binance and Coinbase face SEC lawsuits. In addition to Binance, Coinbase, another entity in the cryptocurrency space, has also been targeted by U.S. regulators. The SEC has accused Coinbase of operating an illegal exchange. Prices of cryptocurrencies declined after the news, with smaller tokens leading the sell-off. Solana, Cardano, and Avalanche experienced double-digit declines, while Bitcoin and Ethereum, the two largest digital assets, fell by over 3%. In conclusion, this week's financial and market news includes the S&P 500 entering a bull market, central bank actions affecting market speculation, European stocks declining, the Nikkei extending gains, currency performance fluctuations, regulatory actions impacting cryptocurrencies, and arguments for both a new bull market and a bear market rally. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.